Since the introduction of the Federal Reserve in 1913, they have been undeniably consistent. That's right, the Federal Reserve has, year over year, devalued the dollar considerably. So today we will discuss how America's middle class is being destroyed. You came here for the truth, so let me unveil that for you. I have an absolutely jam-packed episode today, and I want to begin with a little bit of humor. This is, of course, a cartoon, but it says quite a bit. Dogbert, the financial advisor, you should invest all of your money in deceased livestock. It would be unwise to invest in just one sick cow, but if you aggregate a bunch of them together, the risk goes away. It's called math. And the other individual says, suddenly I feel all savvy. Now, of course, this is a joke, but the real joke is that this is the reality of what happened during the financial crisis. You have an alphabet soup of trash, as I like to call it, whether it's the asset-backed securities, credit default swaps, collateralized debt obligations, and all of this other garbage that they put together into a derivative, mix it all up. Even though it's all garbage, they still rated it at a AAA rating, and surely it all crashed down. But that hasn't stopped at all. In fact, it's starting to snowball once again. So let's bring this into today as we see the Fed's Lockhart says still sees mid-year rate hike as appropriate. Now, who is this individual? This is Atlanta's Federal Reserve Bank President Dennis Lockhart says he still expects that it will be appropriate to raise the rates in sometime in the middle of the year. Expectations of September were in reasonable alignment with the Fed's path. Many people have been predicting September to be a date of a potential collapse. I'm not saying that that's what will happen, but there are assuredly many different factors here, all pointing at September. Very interesting. Conditions will be appropriate in the middle of the year. Futures markets for Fed funds seem to have moved from December towards September. That is reasonable alignment with what I believe to be the likely policy outlook. Very interesting information coming here. They are saying September. Of course, they first said the summer, and before that, they had said the beginning of the year. So we don't really know what's going to happen. If they do increase the rates, they're not going to be able to raise them much at all. Let's look at this. Talking about the Federal Reserve, we're looking at Janet Yellen. Said high equity valuations could pose potential dangers, but that stability risk across the U.S. financial system remained in check. That's right. Everything is just fine. Don't look over here. Don't look over there. Just keep your head in the sand. I would highlight that equity market valuations at this point are generally quite high. There are potential dangers there. That's Janet Yellen's own words, a quote from her saying that there are potential dangers. That's right. When the stock market increases in a straight line from 2009 straight through until today, there are potential dangers. And it's not just potential. This is inevitable. You can't have something go up in a straight line. Nothing works like that unless it's slow and steady. But that's not the way it worked with the S&P 500, the Dow Jones, and others. Let's move on to this. We're looking at the U.S. stock market increasing, and they're showing here from the beginning of 1980 until present day. And we had this real chasm that formed right around the 1990s, but more so since the year 2000, where we see this grand disparity that has occurred in between the stock market, the fake valuation, the fake realization, and this truth, the employed population. It has declined considerably over the years, particularly since the year 2000. We can see a straight up decline in this value here, nothing to be denied. This is probably one of the better indicators that I look for consistently to determine how well the economy is doing. Stop looking at the stock market when that's something that they could boost up, completely contrived. Remember that there are computer algorithms which send the market in opposite directions every single second. The market is acting completely erratic. It's being shut down in many cases where they're unable to trade for periods of time, all because of the computer algorithms, of course, will one day shut the market down for a long period of time. The real median household income in the US is a very important indicator to look at. This happens to be a chart directly from the St. Louis Fed, and I picked from the year 2000. It's a round number, and it really dictates the point that we are headed on a downward slope at this time. You can't deny that. Real median household income is one of the best indicators of the prosperity or lack thereof of any particular nation. We're going to go into this here out of the New York Times. And we're looking at something that every non-rich American family should know. The odds are that you will run out of money in retirement. Is that a shocker to most of the people watching this video? Probably not. But to the general public, they're simply not going to believe it. The Center for Retirement Research at Boston College estimates that more than half of all American households will not have enough retirement income to maintain the living standards they were accustomed to before retirement. And of course, it gets much worse than that. It's not that they're going to be able to just cut back on a few things, perhaps get rid of that data plan on their cell phone and they'll live just fine. We're talking about a completely new way of life, living around the poverty line. That's the way it's happening. And why is because the people in the middle class are being pushed off lower and lower, and they are unfortunately going to be having to take on the welfare system. They're going to have to apply for the food stamps, apply for the different food assistance, social assistance programs that are available. This is what happens when you have a government that is making all of the wrong decisions, and they're doing so intentionally. That is the sad part. In my book, I wrote about this, talking about the Federal Reserve and all other central banks that act without any consent. They can print money until it becomes confetti as we stand by helplessly. Our income shrinks in real term every time they run the printing press. Remember that you might see a $100 bill, and you can keep that $100 bill and you can maintain it for 100 years. But what's going to happen to that dollar bill over the years? There is assuredly going to be a devaluation of that currency. The whole Fed program, the whole central bank scheme is to devalue the money over time. We have had central bankers before say that it is a known fact that, I believe it was Ben Bernanke who said, it's a known fact that inflation erodes the debt. So it is in the interest of the government to create inflation so they can get rid of their debt. This is a scheme that they've been running, and they've been doing so, and it's been hurting individuals right in their pocketbook. This individual here, the governor of Chicago, is saying the state can't bail out Chicago. That's right. Even though they are in desperate need of funds at the moment, they say we can't just bail out Chicago. The whole state is in trouble. Chicago, you're not going to get some sort of special bailout. Very interesting information there. Something that we need to understand, that a lot of the cities around the United States are in desperate need of funds. They're in desperate need of basic essentials, where they're cutting back on the police forces and everything like this. And all it's doing is going to allow the civil unrest to take place. We saw what happened in Baltimore recently and many of the other riots that have taken place. This isn't looking pretty. Moving over quickly into the situation with Greece, I just need to mention something that I have been predicting for quite some time, and now they're mentioning it within Bloomberg. They said international securities firms are curtailing trading with Greece's major lenders that may expose them to the risk of a default by the nation and the possible use, this is it, of capital controls to stem outflows from banks, the people said, asking not to be named because they are not authorized to speak publicly. Of course, this is how it always is. Now, the capital controls are a very generic term. They could be used at any level. But I assure you, if they have the ability to keep individuals' deposits in the banks, they're going to do so. They've been using all little schemes to try and get people to put that money back in with the tax schemes and other things that I've covered here before. But this is showing you that the situation is becoming very critical. This is another article out of Bloomberg. Vietnam devalues the dong for second time in 2015 to boost exports. That's right. They want to maintain export competitiveness. I wrote about that in my book as well. Very important information to note that when you devalue a currency, suddenly, because they're all traded against each other, your currency can look more attractive. Your items that you're selling suddenly become cheaper. Think about with the country that you're in. If you ever purchased an item online, when you have to do that currency conversion, you might feel the hurt or you might benefit depending on where you are. I know myself in Canada, certainly buying things from the United States at this moment aren't exactly the best things. This is just one nation that is printing money. They're all doing so. China is doing so as well, and they're doing so for quite a considerable amount of time now, and they're doing this because they want to, of course, maintain that export competitiveness. That's all for today's video. I wanted to mention a couple things right here that I have been working on my website diligently, and there are some new stuff going up. Even though it's basically half done, I put it live. This is a one-man show here. I don't have the opportunity to do this on a development and then bring it out all at once. This gets done step by step. So work is being done, and I am bringing that information out slowly. It's going to basically expand the ability for me to get information out there to the public. That's all I want to say about that. I'm also posting a promotional video that I did, and you can watch that. I hope that you'll give it a thumbs up and just watch it. It's basically going to be used on the website, but I also wanted to post it here on the YouTube, so I hope you'll check that out. It's only a 2-minute video promotional for the Money GPS, my book. So I hope you'll like that as well. I also wanted to note that we officially reached 20,000 subscribers. I want to thank each and every single one of you. I truly mean that. The comments are amazing. The people that are emailing me are amazing as well. You guys give me the need and a desire to continue to bring this information out there, so I truly appreciate each and every one of you. Thank you. I also hit 3 million views, and of course that's not me, that's thanks to you, both the subscribers, the viewers, everyone out there. Thank you very much. Last but not least, if you like the information in this video, you will surely like the Money GPS, my book. If you go over to Amazon, you can actually flip through the book and see if you like it yourself. Take care.